Hello, it is Thursday the 5th of September. It's the day before non-farm payrolls, so it kind of feels like the day before the decision or the day before there's so much anticipation for this payrolls data, which I find extraordinary because we really learnt during COVID how much this non-farm payrolls data lags. It's at least 6 weeks old, if not more. We found, a month after we knew there were really big job losses, we didn't filter through into the non-farm payrolls for a couple of months. So it really does lag. However, if it does come in weak on Friday, it's kind of going to confirm everything that everyone is suspecting, with the fact that we have maybe started a little bit of a bigger pullback in the economy. And it could become a kind of bigger than it should be unhealthy event tomorrow, if you like. If it still holds up, which it could quite well, again, doesn't mean jobs are good, it just means that the data really lags, then we kind of dodged a bullet. I think we're in probably a wave 4 in a lot of stock indexes and tech stocks, and we continue higher. So let's take a look at where we are here in the S&P E-mini. And when we started the week, we said, we had been sideways in this really nasty consolidation zone for the last 10 days, the last third of August. And I was thinking that this could potentially be a wave 4 and we see another leg higher to challenge the highs. And instead, we reversed on Tuesday. In fact, we had a pretty bad day on Tuesday. That was really led by NVIDIA, because NVIDIA was hit by an antitrust investigation by the Department of Justice, and those shares are still kind of settling. And so what we're seeing in the S&P is pretty similar. But the biggest story for me is, let's take a look at where the NASDAQ is on this daily chart. How much weaker this NASDAQ chart is. It's very clearly completed a wave, and we have lost these daily moving averages properly in the NASDAQ. And compare that to the Dow Jones, which, I know it's only 30 stocks, but you can see that we made a new high in this Dow Jones, and we on the daily are holding this daily 20 moving average. So it's true that these tech stocks and the Magnificent Seven are really underperforming the bigger market. And so if you're trading just the indexes, I think, and you're looking at this on the short side, really the NASDAQ stocks are leading the way. And I think the Magnificent Seven in the tech stocks are going to be leading those. And which are the Magnificent Seven? Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA and Tesla. So we're going to take a look at some of those as well. The most important one, of course, and what triggered this sell-off was NVIDIA and the news of that antitrust probe. Antitrust is, mean it's like if they allow Google to exist as Google does, it's really hard to make a case, I think, for NVIDIA antitrust. But let's take a look at the stocks. So we're going to start with the individual stocks and NVIDIA, which is really leading the way. And really when we started, I'm going to go to regular candles. We were looking for a big 3-wave correction here. I was suspecting that we had completed 5 waves up. It doesn't matter how you count it. But when you have a bigger pullback, which I think we're starting here with a lower high, the previous swing low is always the first kind of primary place that you're going to be looking at, because when you complete 5 waves up, or if you think you have, and you kind of go, then this previous swing low is, and the previous wave 4 is the most likely place to you pull back to. And if you're going to keep going higher, then I usually look at the fibs of this most recent swing and look at where these moving averages are, which here on the weekly in NVIDIA was somewhere in the middle. If we were going to keep going higher, we would pull back to somewhere in the middle and keep going. But here in NVIDIA, I think we are at a risk of a bigger 3-wave correction. And potentially, therefore, we continue low. Now, everyone wants to know, where's the pain going to stop? I'm going to go down to the daily here. It's possible. Remember, the wave in the middle is very often 3 waves. So if it all goes quiet on this investigation, the non-farm payrolls comes in okay. It's possible in NVIDIA. We could do a big 3-wave in the middle here before we do another leg lower, and it would look something like that, 1, 2, 3. That would be the bullish argument. The bearish argument is, of course, that we have completed this middle wave and we are in the middle of another leg low. I have to say, when I look at it, I really like to see the B leg or the Y leg or the leg in the middle very clearly 3 waves, and I can't see that in this move higher. So I'm being a little bit cautious. I actually think it is quite possible that we do another swing higher before we continue lower. But if I'm wrong and we just keep going lower from here with this sneeze, and I measure from this high to low, then I kind of agree with that $100, because that would be where, measured this to versus this first swing, this would be where we were 61.8 of the first swing. And in fact, we could even come down to this $100 level and do this and then still do that, couldn't we? We would have to adjust, obviously, where our equal, and then we would kind of have a range trade, wouldn't we, and back to the bottom. So remember, September is not a happy month usually for stocks, and so that's kind of how I see this scenario, if this is what plays out here in NVIDIA. Now, when I'm not sure, I look at the swing that we're trading inside of, which we are here with these fib levels, and I see, is the market looking at them? And it's really kind of hard to say that it is when I draw it this way. But if I put the fibs the other way, like this, and we may be making a fib pattern this way, and yeah, we kind of are. So we've gone, look, this is a 786 reversal. When you do that, your first target is the 38.2, your second target is the 236 fib, and then you tend to see a bounce back to the middle. So I think that around here, and this 236 would be around 102. So I do think around 100 or 102, we could very easily see a bounce back to the middle here, and that could very easily take us back up to the 120. So we're either going to do something like that, or we're going to do, again, as I thought, maybe a bigger, you don't know. So around 100, 102 potentially was where we could find support, and at the moment we're trading around 105, and that would make sense. So what's going to decide which way we go? I really do think it is going to be what happens with non-farm payroll tomorrow. It's starting to have a lot more importance than it should really, and it would normally. Let's take a look at Tesla, because this really is, this could not be, this is a weekly chart, this could not be more in the middle and without decision. Weekly moving averages flat, all bunched up in the middle. Here we are in this tightening, narrowing range. We've got 2 touches on the bottom, 2 touches on the top. This pivot level through the middle, the 50% level of this most recent swing here is at 219. And if we put our 50% the other way, my dog's just come to say hello, it's down here kind of 207. So this is kind of really our narrow little consolidation range that we are in Tesla here in the middle. And I think a breakout of this range will tell us which way next. We're either going to come down, in fact, no, let's draw it like this. We're either going to come down, something like this, touch this, and then look for this to go higher, or I think, we could make a higher low before we continue lower. This is pretty important. I think if we break out from this range, it's really important that we continue and get back above this weekly 200 moving average before we continue higher. We can see previously when we've got stuck in the middle that it has been quite important support and resistance. So I think above it, we can talk about this being over and on our way up again. In Tesla, if we continue on our way up again, I'm going to measure from this first swing, which is not going to be that triangle that we're looking at. It's going to be an ABC. So our first target is going to be a retest of 260, which is the 61.8 level measured. Remember, I'm measuring from here to here, projecting from here. So 260 would be the first target this way, and a break above 260 takes us up to this equal measured move level at 336. And then this is not the corrector pattern, it's going to look more like this. So we have a swing lower, ABC, and so on. With Tesla, if we go beyond this equal measured move and continue higher, obviously, this whole correction that we started in 2022 is over, and we're in the next bigger leg higher. So really stuck in the middle, and we really need to wait and see what happens with these non-farm payrolls. I honestly don't know which way we're going to break out in Tesla. Unfortunately, it's one of those things where these tech stocks really are underperforming, and you know, I prefer them on the short side, I have to say. Look at this Meta and this weekly kind of triple top thing we've got going on, potentially, or at least a double top here, and a retest of this level in Meta. Now, when I want to know that this is going lower, see this most recent swing that we've made? For me, if it breaks under the 236 fib, we're in a bigger move lower, and that's what we have done this week with these really nasty moves since Tuesday. You can see we were trying to recover this latter level and keep going higher on at the start of the week. Tuesday reversed all that. We've bounced. These fib levels, I will say, in Meta are working very well. So again, if we get a positive non-farm and we get back above 520 in Meta, I think we continue higher, and we are just having a little bit of chop. And on our way, we'll be holding these daily moving averages and looking pretty good for more upside. If we lose 505, we're going to go back to the middle, somewhere around 500, and then continue lower in a bigger 1, 2, 3. And I think that potentially all the way back to this daily 200 moving average would be what I'd like to see in an equal measured move. So it's all going to be decided tomorrow in these tech stocks. Again, for me, the big magnificent 7 tech stocks, I think I'm looking for shorts. So if we can't get back above this 200 moving average, I'm looking for them to roll over on a lower time frame and sell scenarios. And you can see on this hourly how, let's go to Heiken. These moving averages, each time we come back to them and roll over with our Heiken, we see another swing lower. So hourly 200 moving average, king of the chart, 200 moving average on whichever time frame you look at it. Underneath this, we will, I think, see accelerated moves lower in Meta, and it may be that we have to wait until tomorrow until we are out of the woods with this one. Everything else seems to be sort of steadying ahead of tomorrow. There isn't really kind of any big data today that's going to move the market. It's going to be, it makes me a little bit nervous how much people are talking about how much is riding on tomorrow for such awful lagging data. And one thing I will say is I have seen it before with non-farm, really anticipated non-farm payroll, where we'll see a really big move the day before. So if we were to say today in trading, see a really big move lower in stocks, I feel like then non-farm payrolls tends to be a little bit of a damp squib. I wouldn't be surprised then if the numbers come in line because they lag so much and everything's okay. I could be wrong, you know. I think it makes me nervous that people are putting so much emphasis on it, which I don't really kind of think it deserves. So let's talk about these stocks again, potentially. Now, in this NASDAQ, if we look at where we are, these moving averages do suggest to me another swing lower. But again, because these B legs, you know, which we're in. So if this is our first swing lower, we're in the B leg here. When I look at this rally from the 5th of August low, I really can't see 3 waves in this rally. And that makes me think, again, in this NASDAQ, we're going to see something like this. And potentially another swing lower after that. So although I know this is a bearish month and etc., etc. So I'm looking at then what's going to help me, because these fibs are all here, these moving averages here are all in the middle and quite tough resistance. So if I wanted to sell, I would be looking for a rally back to these moving averages. But one thing, I can't really see the fib pattern here. But if I go from this low, this most recent swing that we're inside of, here, I kind of see this as a big, 886, 38.2, and then we come back to the middle And quite often if we do that, the 50% becomes the pivot level. And here we are kind of sideways at this pivot level in the middle. It's really tricky. We move it this way. We've got room to go a little bit lower to this 50%, I think, 18,688. So I wouldn't be surprised if we drop a little bit lower today. So certainly for me, I like today on the short side. 18,688 is 50% back of the whole rally from the 5th of August low. And then I wouldn't be surprised if we bounce from here and then tomorrow we get back above 19,000, which is this 38.2. I wouldn't be surprised if we see a bigger bounce. Firstly, it would be back to the middle of these daily moving averages, and if we go beyond that, we could see a bigger, kind of three-wave move. I realise that that's kind of against everything I've been saying about watch out for September, it's a really ugly month, the war's going to end, it's not going to end, but we might, if everybody is expecting everything to be awful, see a little bit of a bounce, that's all. Now, if I'm wrong, obviously we keep going lower, and if we keep going lower, again, let's put those fib levels on from here, and we just go down the staircase. So underneath the 50% at 18,688, 18,372, and so on, and back to these swing lows, and a retest, I think, around 17,000 would be in order if we are doing that bigger pullback thing. Let's look at where our weekly moving averages are. We've got a lot of support down here with this weekly 50 and the daily 200 moving average. So everything is pointing towards tomorrow just being far, far too important. So we may find a little bit of support today. Let's watch out for that. If we take a look at some of the other indexes, certainly we're already bouncing in this DAX. If we look on the daily, we have gone a little bit sideways at the previous highs from May this summer, and we have pulled back to the daily 20 moving average. As you know, I rely quite a lot on moving averages and fib retrace levels. So whilst we haven't pulled back to this previous swing low, then if I measure from this low to high, you can see we're very nicely holding this 236 fib. For me, we are not in any kind of a downtrend or any kind of short scenario unless we break underneath this 18,526 level and this daily 50 moving average. I think it's more likely we fill this gap, head back somewhere to the middle. And so if you wanted something to counter your shorts, I wouldn't, this DAX doesn't look terrible. I think it's a pretty good support level. If we take a look at where we are in the FTSE and we go back to the daily in this FTSE as well, we've pulled back a little bit more than the DAX has, and we've also lost this 200 moving average, daily 20 moving average short-term support in the FTSE. This one I like a little bit less. It's looking a little bit double toppy here at these highs. And again, if I were to measure from this low to high, we are underneath this 236 fib. So that's going to be the level, the daily 20 moving average, and 8,296 that tells me we're going up again. And I think more likely we consolidate between these two levels and between the daily 20 and 50 moving average, which are completely flat. So no trend, no reversal. So really, I think something on the long side is the DAX looks pretty much better than the other indexes, and certainly the Dow Jones and the DAX look pretty good relative to other indexes. Let's take a look at some others. The ASX, the Australian, again, this one's rolled over. Now I have a fib rule, right? So if I put my fibs from this high to this low, and I was watching this all the way up as we rallied back, this 886 fib level, which is the Aussie's favourite fib level, comes into play because if you close underneath, if you reverse at an 886 fib and you close underneath the 786 fib, your first target is back to the 50%, which is here in the middle at 7,800, and we're not there yet. Now we're not going to go in a straight line, but it says to me that any bounce might be like a lower high, and then I think that we continue lower, 7,800. So it would be, it looks like the FTSE, doesn't it? We're sort of short term here in the middle between these daily moving averages going sideways. I know it's crazy that even the Aussie, the ASX stocks even look at what non-farm payrolls are in America, but everything kind of tends to move together, doesn't it? So I would expect 8,033 to be resistance, and I would look for this to continue lower to 7,848. So even though we break out from this little sideways move that we're in, I think I like this. I'm still looking for a bigger pullback in this ASX. One that's not quite so true for is the Toronto Stock Exchange. So this looks a little bit more like the DAX, doesn't it? In that we're riding this daily 20 moving average, riding these previous lows, an ideal place for it to pull back to. If we measure from the low to the high here of this most recent swing, we're kind of sideways at this 236 fib. So we're holding previous swing low, daily 20 moving average, 236 fib. That's a lot of support at 23,000 for this TSX. So the two indexes that I kind of like or more on the long side are by far the Toronto Stock Exchange and the DAX relative to the others. And of course the Dow Jones, which is also holding up really well. So it's really true that these tech stocks, are lagging and pulling everything else down at the moment. So that's where we are with stocks and stock indexes. I really do think that today is a quiet one. It should normally be, and tomorrow will be the decider. But if in the event that the selling continues today, it may end up being quite quiet tomorrow. Good luck.